MD at Goldiam International, who is now joining us. Mr. Bhansali, morning. Shesha here, and thank you for taking your time out. And the first quarter clearly has been very good for you. And let's understand how your guidance for the full year changes, because you had earlier guided for double-digit growth for the full year FY27. And now that you've reported very strong performance in the first quarter itself, would you like to revise your guidance upwards?
Good morning, Ashesha. Thank you. We're very happy to report our all-time high and all-time best quarter one, both in terms of revenue as well as EBITDA and PAT. You would be appreciative of the fact that Goldiam has, over the last 4 or 5 years, over tripled our revenue base and even faster increased our bottom line and PAT. This is driven by deepening presence with large US and global retailers that we service as a fine jewelry OEM of choice. Regarding FY27, we've come off a record FY26 here. And while our expectations were to have a double-digit growth, we certainly continue to maintain that, though, of course, we are even more confident and looking forward to drive that and hopefully beat that as well as we step into a robust Q1 for FY27 and hope to continue our momentum with this strong growth in the coming quarters as well. Just to share very quickly, Ashesha, Goldiam being largely a company that sells to the US market, we have Q3 being our largest quarter in terms of seasonal sales. So we'll certainly see robust momentum as we continue forward into this fiscal year.
Understood. Mr. Bhansali, hi, this is Snehi also joining in. You did say FY26 was a record year for you. Even before that, you've seen growth between 25 and 30%. Could this be a hat trick here where growth exceeds 25% for you?
Thank you, Snehi. We certainly hope so. The Q1 numbers have been very encouraging, and we've beaten Q1 quite significantly as compared to Q1 FY26. While, of course, this quarter has a one-off of about 21-22 crores with respect to tariff and duty reimbursements that have come in. Even without that, we have had a very, very significant growth north of 35+%, 40%, both in revenue as well as in our PAT numbers. So we hope to continue our momentum as we see order booking strong, higher than last year. And as mentioned, we look forward to a robust Q2 and the key holiday season of Q3.
Okay, so the momentum continues to remain strong. Mr. Bhansali, you spoke about exports and the fact that US continues to remain a big market for you. What kind of growth do you expect in exports going forward? And other than US, which other markets are likely to aid that growth?
Sure, thank you, Ashesha. So at Goldiam, about 90% of our sales come from the US market. That is by far the largest and most profitable jewelry and fine jewelry market for B2B vendors that are like us in the diamond-studded jewelry industry. Outside of that, we are hoping in this fiscal year to introduce a couple of markets like Australia, deepen our presence in Canada, as well as deepen our presence in new markets that have already delivered certain numbers in Q1, like the Middle East, Israel, etc. So these are pockets where we believe there is certainly a lot of growth left ahead for us. However, having said that, the core focus of the company by large will continue to remain in the US market, given both its size, scale, as well as its profit potential. Outside of that, of course, our retail business, Origem, is continuing to build very nicely. Today, Origem stands at about 26 stores, being amongst the top 2 largest lab-grown retailers in the country. And we hope to continue that momentum moving forward as we move into and go deeper into FY27 and FY28.
Understood. In fact, my next question to you was on Origem. Just trying to understand how the lab-grown pricing is playing out on ground. What is that doing to demand? What is that expected to do to your margins? And also, you did speak about Origem. You had earlier said that you aim for each store to break even within 6 months. Is that timeline online right now?
Thank you, Snehi. So at Origem, we and generally also for the industry, now that 90% of Goldiam sales comes from lab-grown diamond-studded jewelry. We feel very confident on the inherent product itself of lab-grown diamonds. At wholesale, we see a very strong base of pricing with further price erosion not even being a factor that we believe will continue into the future. In fact, over the last 2 quarters, we have seen lab-grown diamond prices increase for certain sizes, particularly the smaller sizes of diamonds, as compared to the prior base. So I think the sort of erosion of price that was a factor that we were navigating in FY22, 23, 24 is certainly a matter of the past now. At current rates, we believe it's a great time to invest in inventory and, of course, then utilize that loose diamond inventory in fine jewelry distribution globally as a B2B company and in India as a B2C company. With respect to our plans at Origin, we hope to continue our store expansion.
Right.
The trajectory of break-even is more or less in line with some stores, yes, and certainly mall-based stores hitting those numbers as we had shared earlier in con calls, and high street stores needing further development, which we're working on an ongoing basis to
Correct.
make our brand a full stack retailer. So
Right.
work continues, and as that does, we're happy to keep sharing updates.
And we'll keep interacting with you more often to get those updates. Mr. Bhansali, thank you so much for taking your time out and joining us here on ET Now. On that note, we need